Hi, I'm self-directed investor John, and there are over 40 million active online trading investors, like myself, that miss out on mega opportunities like BNBI in the stock market every year. I want to take this opportunity to introduce my fellow investors to an up-and-coming financial social media company before all the fat cat Wall Streeters and bankers find this rare gem. In this short video, I'm going to explain why I believe I have found the next big potential social media acquisition. It's trading under the symbol BNBI, and it has the potential to raise significantly in price over the next 3 to 6 months and longer. I'm also going to tell you why bullsandbears.com could get major attention and raise eyebrows from the likes of Facebook, Google, Yahoo, Time Warner, or News Corp, and why BNBI can be a potential buyout target for one of these social media giants. BNBI is developing a first-to-market financial social media platform incorporating financial content, products, and services for the regular Joe the Plumber investor to have access to. I also feel that the potential exists that BNBI stock could possibly outperform Twitter's IPO on a percentage versus percentage basis. Yeah, big money to be made, some of the biggest money the stock market has made from a company's IPO. An IPO is an initial public offering, and, in my opinion, they should be labeled UPO, or unfair public offering. An IPO is the first public sale of a stock by a private company. Let's take Facebook, which was the most highly anticipated IPO of all time, as an example. Morgan Stanley was the lead underwriter for Facebook, or in other words, the main distributor of shares to its choice of investment bankers. They in turn sold their cut of shares to their wealthy clients. You, the average investor, are left in the cold unless you had an account at one of these specialty banks and have deep pockets. Now here's where it gets nefariously unfair to you as an average investor. The first day Facebook started trading, it immediately gapped up with a 14% premium over its $38 IPO price, the price all our rich friends got. You, the average investor, are buying at inflated premiums, while our rich friends enjoy their easy 14% and start dumping their stock on you. All this dilution drives the stock lower and lower, and you are the loser. Well, 3 months later, what is called the lockup period has elapsed, and now company insiders, venture capitalists, and angel investors are allowed to go out there and basically dump their free or discounted stock. This further plummets the share price. This scenario sums up every IPO, even the new Twitter IPO, unless you are the special one that gets a piece before the crowd. Let those greedy crooks have their lousy 15 to 30% gains at the expense of hurting the little guy. In my opinion, we're about to make more significant short-term gains with BNBI. I'm about to tell you about a rare phenomenon that you may have heard of and is rarely mentioned unless you are an investment banker. The term is special IPO. Google the term and I bet you $1 million you will not find anything on it. That's because it's the best kept secret on the street. I define a special IPO as a brand new publicly traded company or reverse merger. It does not go through the traditional roadshow and underwriting the traditional IPO goes through. And BNBI could very well be the most sought-after issue trading in 2014. Take action before rumors, news, or mergers are announced. This could be the difference between an investor that is savvy enough to realize significant gains or part of the herd that misses out. Why are these special IPOs so successful and go up so fast and easy? Simple answer is they're basically the opposite of a traditional IPO. They do not have underwriting. Remember, that's where our rich friends get shares before it starts trading and they dump them on us for a premium. This means with BNBI as a special IPO, you could be some of the first investors to get shares of this newly traded company. With a low float, the trading market has the ability to create immediate price increases. All our rich friends get on board after you have bought and owned BNBI for some time, and in most cases, you're already profitable. BNBI has been reporting positive news for the last 3 quarters with regard to launching a financial quotation platform, an issuer services platform, an updated corporate website with a newly registered private offering to accredited investors, and more recently signed agreements with investor relations and corporate advisory firms. This platform will not only act as a virtual gathering place, but will also provide financial content, products, and services to members. Bullsandbears.com is set to provide the industry-standard social media platform for the financial community. BNBI is currently trading around $2 a share. If it were to get bought out at even $10 per share, that would represent a nearly 500% gain for 5 times your initial investment. An even more conservative $5 a share represents a 250% gain, turning a $5,000 investment into $12,500. There are only 3 to 4 special IPOs a year, and some years only 1 or 2. It is a phenomenon only a handful of wealthy know about it or can even find out about it. I'm a whistleblower and I'm blowing the whistle on this so everyone has a chance. I want to see you at the top. Please sign up below so I can email you our free BNBI research report, in which I'll explain why I feel BNBI will greatly outperform Twitter's IPO. Inside your free report, I will also tell you why I believe BNBI could get bought out fast by one of the media giants I mentioned earlier in this presentation. Get your free report now.